JEPI, or the JP Morgan Equity Premium Income ETF, has been one of my favorite higher yielding ETFs for a while now. So much so that at this very moment across all my portfolios, I own over 1,000 shares of this ETF, and here's a few screenshots for some transparency. But one of the main questions that gets thrown around a lot when it comes to JEPI or other high yielding ETFs like this is, first off, how in the heck does this ETF even work, and how does it pay such a high dividend consistently? But also, how many shares does someone need to own in this ETF in order to retire off the dividend income generated from it? Well, in this video, we are going to go through all that, and I'm even going to show you exactly how much I make personally from JEPI on an ongoing basis as of right now. Now stick around, because I promise you this video is going to be packed with a ton of value and more. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earn more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first off, heading over to JP Morgan's website to learn a little bit more about JEPI, how it works, and what it has to offer. It says JEPI seeking consistent premium income with lower volatility. The JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure, but with less volatility because of that covered call overlay. The expertise is very impressive, with portfolio managers of over 60 years of combined experience investing in equities and equity derivatives, which is also important. Now, the portfolio says defensive equity portfolio employs a time-tested bottom-up fundamental research process with stock selection based on our proprietary risk-adjusted stock rankings. Disciplined option overlay implements written out of the money S&P 500 index call options to generate distributable monthly income. So basically, in short, this ETF buys a basket of stocks, some super high quality ones as that, Amazon, Microsoft, Intuit, and MasterCard, just to name a few. But then with that uses a written out of the money covered call overlay in order to not only generate massive premiums, which are then distributed to investors like myself through the form of monthly income, but also in order to help if the market does see some volatility, the option overlay can definitely pick up some of the slack. But also important, how is this ETF performed over multiple different time frames? Well, the ETF's been around since around 2020, and let's be real here, JEPI is basically traded more or less sideways. I guess technically it is up 7.5% on the max time frame, but honestly, being a holder of JEPI basically since this ETF came out, and I'm not gonna lie, I bought a ton of shares on the way up in price and the way down over the years, which, like I said, as of now, I have over 1,000 shares. But over time, investors like myself can't really complain, considering that we bought into this ETF for the most part to get that monthly dividend, and although price appreciation would be great, along with that monthly dividend, it's not necessarily the top of mind, at least not for me personally. But year-to-date performance, JEPI is basically flat, also up 1%, which obviously is lagging the overall market, considering things like the S&P 500 is up well over 20% year-to-date. But to get to the main objective of JEPI, at least for most investors, including myself, the dividends. Now, JEPI is offering a trailing 12-month dividend yield of around 8.65%, which I'm not going to lie is pretty dismal, considering JEPI used to have a much higher trailing 12-month dividend yield in the past. Now, of course, ETFs like JEPI pay a different amount on an ongoing basis because it's going to depend on things like if or if not the underlying holdings in the ETF trades within a certain range within that monthly time frame, and or how big the premiums are, etc, etc. This ETF is not necessarily going to be very consistent, and as you can see, since inception, it's been pretty much everything but that. Considering the last dividend that was paid back in November was 39 cents, but going back to 2022, the dividend that was paid in November was 61 cents, making the dividend paid last year about double that of the recent one. Now, of course, a 39-cent dividend on a monthly basis for an ETF that costs about this much is not bad at all. Again, it's giving you around a 8, 9, 10% yield, depending on what happens from here. But still, a lot of investors like myself that bought the majority of shares of JEPI that are in our portfolio as of right now, during this time frame when JEPI was paying around 62 cents a month or 52 cents a month, or something within that range. I never really expected JEPI to be paying as little of dividend income that it paid, even what we saw throughout this last year, but here we are. All in all, to say that I'm still overall okay with my shares of JEPI, and although I've considered selling off some of my shares of JEPI for other things like JEPQ, which is another JP Morgan premium income ETF that not only pays a nice dividend, also even a larger trailing 12-month dividend yield, but because of the holding breakdown, JEPQ is up 22.94% as far as price return over the year-to-date time frame. But even still, like I said, JEPI has paid quite a big dividend over multiple different time frames, and hopefully over the next year, we can see the dividend keep rising. Now next I want to show you some of the purchase of JEPI that I made over the past year. There was times where I bought 10 shares of JEPI, 5 shares of JEPI, and basically for me personally, the thought process of buying a ton of shares of JEPI is the fact that the ETF is relatively low beta, does pay somewhat of a high dividend, at least it has historically, and until I thought of something else to buy, I sunk a lot of money in JEPI earlier this year. Now to look a little bit deeper into how much dividend income I'm earning on a monthly basis as of right now, with all my shares of JEPI throughout all my current portfolios. I currently have somewhere around 1,100 shares of JEPI. I haven't counted them all as of recently, but something along those lines. So if JEPI, at least as of last, was paying around 39 cents per share per month times 1,100, we're looking at somewhere around $429 on a monthly basis from dividend income from JEPI alone. Now what's crazy is that this time last year when JEPI was paying a 61-cent dividend, let's just say that JEPI's dividend never dropped and let's say it was still paying that 61 cent per share per month, I'd be looking at a $671 dividend on a monthly basis, which I'm not going to lie, that's sort of what I was more so expecting for whatever reason back when I really loaded up on a lot of shares of JEPI. So although I'm still very happy with my around $400 per month, more or less dividend income from JEPI on a monthly basis, like I said a little bit earlier, I do think that there could be some better options out there, especially even for some of the new higher yielding ETFs, if that's what you're particularly looking for. Now, if you might be curious on if or if not I'm currently going to be buying any more shares of JEPI moving forward, the answer is most likely not. And that's because if I am going to be buying any more of the JP Morgan Premium Income ETF, it's going to be JEPQ, which I've loaded up over the past few years, I think around 350 to 400 shares now. And of course, I'm asking myself, why couldn't I just have bought more JEPQ rather than JEPI? But because we can't change the past, here we are. But moving forward, when it comes to some of these higher yielding ETFs, I'm definitely going to be paying a little bit closer attention to things like the holding breakdown, considering that JEPQ specifically has much more exposure to things like technology, which makes this ETF higher beta, but also means that when the market really starts to move, even with that covered call option overlay, this ETF has seen some pretty impressive price return. Now, the one thing that I'll say is that if you want to see massive price return, I don't necessarily know if JEPQ or JEPI are necessarily the ETFs that you should be invested into. But once again, I think it's important to note some of the top holdings within these different higher yielding ETFs, if that's what you're looking to invest into, and pay much closer attention to them. Now, lastly, in regards to how many shares of the JEPI ETF an investor could buy in order to have the dividend completely cover all their expenses, this right here says that the average expenses of a US household in 2022 at least was around $3,693 for one person. So because the JEPI ETF, at least as of last, paid 39 cents on a monthly basis for the last dividend, we would take 3,693 divided by the 39 cents, which means an investor would in theory need 9,469 shares of JEPI in order to retire off the dividend if that was what their expenses were at least. And because JEPI is around $55 per share as of current, an investor would need around $520,000 invested into the JP Morgan ETF in order to retire off the dividend, but of course this can change depending on what your expenses are, etc. So there we have it, a complete breakdown of JEPI, the JP Morgan Equity Premium Income ETF, how the ETF works, how many shares of JEPI I currently have as of right now, how much dividend income I'm earning on a monthly basis, and my plans moving forward. But when it comes to JEPI, the JP Morgan Equity Premium Income ETF, I want to hear from you guys down below if or if not this ETF has somehow, some way landed a spot in your portfolio. And if it has, comment how many shares you have in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.